There are countless ways to analyze an investment, but at the core, the essence of investing is that you're buying cash flow. Whether you purchase a rental property, a commercial building, or a business, the value of that investment is determined by its cash flow. This is true even if you're investing in a startup company with burning cash and has never produced a profit. You invest in it because you perceive a potential. You're anticipating it will eventually turn a profit and have positive cash flow. Since it's all about the cash flow, an investment opportunity is when you perceive that cash flow, whether actual or forecasted, is priced less than what you determine its value is or will be at some point in the future. The other component of investing, especially with real estate, is appreciation. You might buy a property and have minimal or maybe even negative cash flow, but when you sell it, those capital gains could offset the cost of owning that property. In a scenario like that, you might decide that it makes sense to forego the cash flow in anticipation of that future payoff. Now, if we're going to consider the option of investing in the Austin real estate market, we need to figure out whether the prices, rents, and the overall market conditions are creating any opportunities. If you stick around with this video, I'm going to analyze the data in ways you may not have considered before to see what we might uncover.
Take it back.
Let's start by talking about a median price, because that term is used everywhere. The mathematical definition is the median price is the very middle of the data set, with exactly half of the houses priced for less and half priced for more. It's designed to give a more accurate reading than an average price. Here's a simple example. To get the average, you add them all up and divide by the number of transactions. In this case, the average is almost $1.2 million. The median, though, is $750,000, which is the midpoint. Even though there are no transactions at $750,000, this median price paints a very different picture about what's going on. For August 2022, the median price in the city of Austin was $555,000. Instead of looking at that year-over-year percentage, let's look back at March 2022, when the median price was $624,000. Like I told you in the beginning, I'm going to look at these numbers several different ways to see what kind of opportunities we might find. If the median price was $624,000 in March, and $555,000 in August, that means it declined 11% in less than 6 months. Looking at that monthly year-over-year percentage, we might assume there's a seasonality factor at play. But if we look at the same period from last year, which was at the height of the overbidding and the price run-ups, we see that the median price increased from $515,000 to $540,000 between March and August, which is about a 5% increase. So in other words, last year the median price went up by 5%, and this year it went down by 11%. But you would never know that by looking at only the monthly year-over-year percentages. In fact, Cord Shiflett, who was the 2022 Austin Board of Realtors president, said there's no need to worry. According to his analysis, home prices are still appreciating. Of course, he's basing that on that year-over-year percentage, which compares August of this year to August of last year. Now, the other thing to remember is that by definition, the median price is the midpoint. So if it's coming down, there are either more transactions taking place at the lower price points or fewer transactions taking place at the higher price points, or some kind of combination of the two. Let's take a look. There were fewer total transactions in August, but the percentage change at the top and the bottom of the price spectrum moved in the opposite direction of what we would expect. There were a higher percentage of transactions over $1 million and a lower percentage of transactions under $400,000. There was an increase in the mid-range, especially in that $600,000 to $800,000 range. But based on this, how can we explain the decrease in the median price to under $600,000? Well, if we take a look at the transactions over $1 million, we'll see that there were about half as many over $3 million in August as there were in March. Another reason for the decline in the median price are price reductions. These numbers don't specifically show how this has impacted the market, but we need to realize that a year ago, a house might be listed at $600,000 and got bid up to $700,000. In today's market, that house might be listed at $700,000, but after 30 to 45 days in the market, the price gets reduced to $600,000. Now, in a scenario where the seller is motivated, they might reduce the price sooner, but two things remember. One, there aren't many foreclosures, which means houses aren't being sold for 30 to 40% less than last year's market value. If the seller can continue to pay the mortgage, they can stay in that house or rent it out until more buyers willing to pay the higher prices come back into the market. Or should I say, if they come back. The second thing to keep in mind is a component of the median price that is often overlooked. The number of transactions in any given month is a tiny percentage of the entire market. The best estimate of the total number of housing units are in this City of Austin's report. In 2020, they estimated there were 460,000 with another 90,000 new units added that year. That means there are approximately 530,000 housing units in the city. When we consider there are between 800 and 1,200 closed transactions in the City of Austin every month, we see that this is a very small percentage of the total number of housing units. But that tiny percentage determines median price, tax appraisal values, and comparable sales, which will be used to estimate market value for houses that will be listed in the future. If every one of those 530,000 homeowners decided to sell their house, there wouldn't be anywhere close to enough buyers to purchase them all, so values would tank. On the other hand, if half of the current sellers decided not to sell, prices would shoot up because there wouldn't be enough houses to satisfy the demand. This is very similar to what happened last year. There were more buyers than houses available, so prices went up. Now the reverse is happening. There are more homes and less buyers, so prices are moving downward. Now, to make sense of all this, it's clear that the market is shifting. In the current market, if someone wants to sell their house, they will need to price it in line with the current market says it's worth, as opposed to what last year's market said it was worth. In other words, a seller is not going to get as much for their house as their neighbor did last year. Sometimes that's difficult to accept, but if a seller is motivated, they will eventually come to terms with it and begin to offer price concession. And the more aggressive the concessions, the quicker they're going to sell the house. Now, from an investment standpoint, it really depends on your forecast concerning future values, because right now, you can buy a house at a discount compared to what it would have sold for last year. But what do you anticipate the value being in another year? Rising mortgage rates have pushed many buyers out of the market completely. Even though prices are coming down, they're not coming down as fast as rates are going up. Now, from a landlord's point of view, that is very good news, because if someone can't qualify for a mortgage, they're going to be forced to stay in the rental market, which brings up what I believe is one of the biggest investment opportunities right now in the Austin market. This is the tax record from a rental property in Leander. I like it because it illustrates a number of things that are going on in this current market. First of all, notice how much the appraised value increased for 2022. Because this house was titled under an LLC, there is no homestead exemption. So the property taxes increased 56% year over year. Now, this is probably why the owner is trying to sell the house. They had reduced it to $379, but it was still unsold. Based on comparable sales in the area, if they reduce it to around $350, they'd probably find a buyer. Now, even though this is only one example, things like this are going on everywhere across the entire metro. Transactions are closing lower than the appraised values, which means that next year we can expect to see reductions in those appraised values, which would reduce the dollar amount of property taxes, even if it's not a homestead. I threw all of this into a spreadsheet to show you what I'm talking about. The far right column is the estimated purchase price for the same house we just looked at in 2020. If you would have purchased the house then, with a 25% down, your principal and interest would be $1,194. You'd have about $500 a month in taxes, and I estimate $100 a month for insurance. That means your total PITI would be $1,781. There was a rental listing for this property in 2020, which is where I got the estimated rent. So using those 2020 numbers, you would have a slightly negative cash flow and a 5.3% cap rate. I know this is not a commercial property, but mathematical principles can be applied to any number I want to apply them to. I like using that cap rate math for residential properties because it eliminates the cost of financing when evaluating cash flow. If you purchased this house in 2021, interest rates would have been lower, but because of the buyer demand, you would have paid more for the house. The $2,000 rent estimate is based on some rental listings I had that same year in the Leander area. The 2022 column shows the estimated purchase price and higher interest rates, along with the new property tax amount. Even with higher estimated rent, there would be a negative cash flow, but the cap rate would go up a bit because the cost to purchase the property was lower. Now, when we forecast for 2023, we've locked into the principal and interest from the previous year and can expect the taxes to decrease because a sale at $350,000 means the house is no longer worth $414,000. Now, this is only an example. If you want to get serious about a specific property, we would need to look at a couple of other things. But I hope this shows you that by looking at the numbers several different ways, you might uncover opportunities that someone else might not see. You know, I get emails, texts, and phone calls almost every day from people who think about buying or selling real estate in the Austin area, and I'd love to help you out too. If you like this video, you should check out this other one that I did. And don't forget to subscribe to my channel and hit that notification bell. All of my contact information is in the video description, so don't be shy. Let's make your real estate dreams come true.